Assalamu alaikum viewers, welcome to our channel 786 Invention. In this video I want to explain the concept of debit and credit, which is very useful for beginners and also for the non-accounting personals so that they easily understand accounting terminology. Let's start with the basic concept of debit and credit. Simple concept of math, plus and minus can be very useful tool to understand the debit and credit. Anything which has their normal balance, debit or credit, equal to debit and credit plus credit plus debit plus otherwise minus. We have five pillars of accounting: assets, liabilities, honor equity, income and expense. Their normal balance is debit, having its normal balance is debit, liability credit, honor equity income credit and expense debit. When there is increase in assets, as we know, assets have debit balance, and having debit balance, asset increase, and liability having their normal balance is credit. When there is a credit balance, it means there is increase in liability. Same the situation with the honor, equity and income. And the expense having debit balance, when we have other debit balance, it means expense increase. Assets having normal balance debit, having balance of credit mean decrease. Liability debit mean liability is decreasing. Same is the situation with honor equity and income. Expense, because it has their normal balance is debit, and when there is a credit balance of the expense, that mean expense is decreasing. Hope you enjoy this video and understand the concept of debit and credit. Please subscribe my channel 786 Inventions. Thank you very much.